In this video, we're going to be talking about where is the Bitcoin bottom. And by the end of this video, you should have a pretty good idea of where the potential Bitcoin and broader crypto market bottom will be. You're also going to have a great understanding of what's happening in the macroeconomic world with interest rates, with the war in Ukraine, with the rising prices of food and fuel, and how that actually affects the crypto markets. And make sure you stay to the end of this video, because by the end of it, you will have a better grasp on what's happening in the overall market. So that way you can use this to time your investment decisions. So with that being said, my name is Adam Winnig. I've been involved in Bitcoin since 2014. And I made this channel to help make your crypto investing experience easier, lucrative, and more fun. So with that being said, go ahead and click like and subscribe to our channel so you don't miss out on any future videos. Now, with that being said, I am not going to play expert in this video. What I am going to play is a guy that knows a little bit, and a guy that can take more complex subjects and make them a little bit easier to understand. So what we're going to do is we're going to take a look at the charts really quickly, and then I want to spend some time digesting this article that was written by this guy named Arthur Hayes, who is one of the best writers in all of crypto and historically has been very, very accurate. Now, with that being said, this is a longer article and I've just taken out the highlights and I want to talk about it to you. If you're somebody that doesn't really understand economics that well, or you don't understand crypto that well, then this is going to basically dumb it down for you. If you're anything like me, I need things to be really simple. And so I spent a lot of time reading this to fully understand it, so that way you guys can have the best idea. So with that being said, let's take a look here. If we just take a look at what's happening with Bitcoin, we see that we've really been in this giant range between, if we just call it $30,000 and $60,000 for like a year and a half, right? Since really January of 2021, we've just been kind of in this range. And you can see here that this red line that I've drawn is $30,000, right? And $30,000 is a key psychological level. It's a whole $10,000 increment, and it seems to have been holding pretty well. If you know anything about technical analysis, you can see that the stronger, the more times price has bounced into an area, the stronger it is said to be. And we can see that we've had this holding up as support since January of 2021, which is really good. So you can see we bounce, and now we're just ranging, like bouncing choppy right here around $30,000. So what does this mean? Does this mean that this is the very bottom, or could we see prices go lower to like $20,000 to where we were in last market cycle? So let's take a look at this and dive into this. So again, Arthur Hayes, I'm going to do my best to make this really, really simple for you guys to understand. And by the end of this, you'll have a really good understanding of what's happening in the world and what this means for crypto and where the bottom could be. So basically what he is saying in this article is he's saying that the bull market can really only begin again once the Fed has basically begun to reverse their course. Okay, as you've probably heard, the Fed has been increasing interest rates. Okay, and when the Fed increases interest rates, it makes money more expensive. And generally, this is really bad for risk assets because money is more expensive. So people aren't going to go out there and borrow money to make investments. And generally, when interest rates rise, asset prices fall. And when interest rates are falling, asset prices generally rise. Okay, so he's basically saying that a bull market cannot really happen if the Fed is going to continue to increase the interest rates like they have. Once they stop increasing interest rates, then it can continue. Now, with that also being said, there is a midterm election happening here in the US. And this will become a bigger and bigger deal as we approach November. The current ruling party in America, right, is the Democratic Party. And they really need to do something to correct course, or many of the Democratic Party may be looking for real jobs, right? And a lot of this, what the Fed does and whatnot, it comes down to the political makeup of how the U.S. actually works. And if the people in America are not happy, then they're not going to vote for this party, right? So inflation has become extremely important to voters, especially if you think about the vast majority of voters, they're hardworking Americans. And basically what's happened for the past several months here is that as inflation has continued to rise and has hit all-time highs, their money is becoming worth less and less. So they're working harder. They haven't really got any pay raise, and they're able to buy less stuff. Which is not a good look. Most Americans will probably reconsider if they did vote for the Democratic Party. They may consider not voting for them because of what's happening here in the world. Now, the average person cares deeply about the prices of fuel and food. Okay, if you talk to my mom's, I was on the phone with her. She's always talking about, oh, the gas prices in California, they're almost $7, right? She's always talking about this, right? And it's true. Like, if you take a look at the gas prices around the country, they're the highest that they've ever been. If you take a look at the price of food, it's very, very high. And the average person really cares about this. And the problem is that inflation is partly the problem, but the other part of this problem is really this war in Ukraine, which, I don't know, it seems like we heard a lot about it and now we're not hearing as much about it, but there's still a war that's happening in Russia and Ukraine. And basically what's happening is that the West, the US, is basically supplying the Ukraine with military resources to basically fight Russia. Okay. And obviously there's all these sanctions on Russia. If you're not familiar with what sanctions are basically a law, right, that the US will put on a different country, basically, where they won't allow them to export their goods or basically won't allow them to do trade with other countries because international trade uses the reserve currency, which is the US dollar, which the US obviously has control over. So anyways, so that's what's going on there. Now, with that being said, Russia and Ukraine produce a large amount of fuel and food. Okay, so people are complaining about the prices of fuel and food. Russia and Ukraine happen to produce a large amount of the world's fuel and food, and actually an even higher amount of fertilizer. Okay, which fertilizer is actually obviously used to make food. So this is a really big problem that he talks about here. And what he basically says is that the US government can offer fuel and food subsidies, which will allow the consumption of these essential items to remain constant at affordable prices. Now, with that being said, in order for the US to basically give like food stamps or to give subsidies for fuel and food and keep the cost of the prices low, they need a way to generate more cash, which basically means if they're going to generate more cash, they're really going to need to print more money. Right? Which we saw what happened when we started printing money to overcome the COVID crisis. Remember the COVID crisis that happened? It was the best thing that ever happened for crypto, right? People got the stimmy checks, they dumped it in and to crypto, and the crypto market went wild. And so he basically said, $1 million Bitcoin, $10,000 to $20,000 gold. So yeah, and obviously that's not going to happen overnight, but this is his longer term sentiment, right? Now, with that also being said, he's basically saying that asset holders must feel like the ugliest ducklings ever created, which is true. And if you're an asset holder right now, you're holding crypto, you're holding stocks, you've been wrecked, right? Like you're probably in 50 to 90% drawdown if you're holding crypto, 20, 30% drawdown if you're holding stocks. And the reality is that the largest population in America are the baby boomers. And the baby boomers have a lot of voting power. And this all comes into play, right? Are these people that, they're hitting retirement, their net worth is all in assets, are they going to vote for a party that is continuing to make asset holders experience pain? Probably not. So with that being said, basically, right, what we talked about, in order to get the price of food and fuel lower, they need to offer subsidies. And in order to do that, they need to print money. And when they print money, he says that the mother of all risky asset bull markets will happen. So we'll enter the mother of all risky asset bull markets, which is what we're really looking for. So now, as far as finding out, that's kind of what's happening on macro, right? We have this increase in food prices, increase in fuel prices. We have the war in Ukraine, in Russia going on. We have this political landscape that's shaping up where, the Democratic Party is going to need to start acting in order to secure votes if they want to continue to have their job. And so how do we actually decide where this bottom actually is? And again, obviously, this is not my thoughts, but I do really respect this guy. I think he's one of the best writers in crypto, and I thought this article was one of the best that I've read in a long time. But here's his bottom metrics. He basically says that the first bottom metric is when the correlation breaks down between Bitcoin and Ether and the NASDAQ 100, which is tech stocks, obviously. So correlation obviously means how closely are these two moving in tandem together. So they had been moving quite in tandem together. And he's basically saying that just recently the correlation has started to break. As you can see, if we take a look since May 22nd, we've just been in this tight range where, May 22nd here, we've had different actions. So he's basically saying that the correlation is breaking down. And that's what these fancy charts are basically attempting to explain, that the correlation is breaking down, which is one of his bottom cycles. Okay. The second thing is that if we take a look at crypto cycles, right, every time we have busted up, we've made an all-time high, and the drawdown in the following bear market is still higher than the previous all-time high, okay, is what he's saying. So if we just take a look at Bitcoin, for example, he's saying that this pink represents the drawdown, right, from the previous market cycle. So obviously here we had 95% drawdown, and then here we had an 85% drawdown, and then here we had what is that, 80 something percent drawdown, and then here it looks like we've had a 65% drawdown, right? So the drawdown is kind of in a sense moving upwards, right? And also the second thing is that this was the previous all-time high, and our drawdown is quickly approaching it, right? Which was around $20,000, right? So never in history in the cycles of crypto have we broken down below 20,000, the previous all-time high. That's why I saw people saying, oh, we could break down to $8,000, $9,000. I just don't see it, and I tend to agree with Arthur on this one. If we take a look at Ethereum, same sort of thing, right? So what was this? The previous all-time high here on Ethereum was around $1,300. We're currently around $1,700, $1,800. So we're nearing that point, right, of that previous all-time high. So anyways, this is his second thing. And he thinks that Bitcoin bottom could be $25,000 to $27,000, and for Ether, $1,700 to $1,800. So if we just take a look at Bitcoin here, we did already dip in there, right? We briefly dipped down to $25,000, and maybe this was the liquidity grab. Maybe this was the bottom. I don't know. I don't have a crystal ball, but based on what Arthur is saying, it's not, totally far-fetched. If you take a look here, also $1,700, we've just barely dipped right to $1,700, which you can see back here was support, these wicks, support these wicks here. So maybe, right? Maybe that's the case. Moving on here. The other thing that he says, which I totally agree with, is he says that if I had a natural language processor which ingested all articles about crypto featured in the mainstream financial press, I could chart a linguistic sentiment indicator. He's basically saying that if you look at the sentiment, people are so bearish. And this is another reason why I think the bottom is probably close to being in, because if you look at crypto Twitter, there's nobody that's bullish. Everyone is bearish. All the influencers, everyone is bearish. And you just want to do the opposite of the herd, right? That's the idea, right? And when you hear people saying Bitcoin's worthless, all of this stuff, like this is where the bottom goes. Like this is where the bottom is. When people are in euphoria, this is where the top is, right? And I did a YouTube video about this recently, talking about the emotional market cycles. And so I'll pull this up right here. This is the market is made up of human beings. Human beings are emotional, and maybe you've seen this chart before, but if you take a look at, where do you think we are? We're definitely closer to anger and depression than we are to belief, thrill, and euphoria. So this is another thing just based off of, he was saying a language sentiment indicator or an emotional sentiment indicator. I would say that we're also, somewhat close to the bottom. So in conclusion, his checklist, right? Bitcoin and Ethereum are less correlated than NASDAQ. The current price levels are close to the previous cycle's all-time highs. And the mainstream financial media gloats about how stupid and greedy plebs who attain short-lived wealth investing in crypto, right? The other thing that he mentioned was we had this Luna collapse, right? Where LFG, Luna Foundation Guard, right, sold 80,000 Bitcoin, okay? Which is crazy. 80,000 Bitcoin, right? Like that is a giant whale that's sold off, right? So he said, after contemplating the nature in which the Bitcoin are sold, I'm even more confident that 25,000 and 27,000 is Bitcoin's bottom cycle, okay? Now, with that all being said, nothing can really start to change until the macro environment changes, right? We can't exit this bear market. So he's basically saying that, we're not just going to skyrocket up here. Like we're probably just going to be chopping around here. It's probably going to be quite boring price action here for the next little while, until we get a clear signal from the Fed that they're going to do something, right? Like the Democratic Party needs to start securing some votes. They need to change something. They need to lower interest rates, which it sounds like there could be a couple more interest rate hikes before we actually get the change in tide of interest rates, which will begin to lead the bull market once again. He also says that most traders are 50 to 90% in drawdown, and they're in a loss reduction mindset. They want to exit at a less bad price. Totally true. And they're not mentally primed to put in more capital at these bargain prices. Therefore, any rally will be sold into, okay? And I love how he wrote this. Therefore, any rally will be sold into until the underbrush in the forest is clear and the diamond-handed apes can emerge safely from hibernation. Basically, choppy price action, right? We got a green candle here today. I'm assuming that even if we get up into 35,000, I think, it's going to be sold quickly. People are trying to sell at slightly better prices to just exit their positions, especially on altcoins, okay? In conclusion, he basically says Ether could still hit $10,000 by year end, but this all rests on what's happening with inflation, with the cost of food and fuel. So anyways, if you like this style of video of me kind of trying to dumb down more sophisticated thought, then please let me know in the comments below. I'll make more of these. I think this is one of the specialties that I have, is being able to take a little bit more complex topics and make them simple. If this was helpful and you'd like to see more like this, then go ahead and like, subscribe, and I'll continue to do more.